Well, traders, welcome back for another evening update. My name's Jason. This is Forex Traders Live, and what an interesting day, or a past couple of days we've had. I appreciate you guys being patient with me last night. By the way, I hope you guys enjoyed the video. I had to be away from the computer and didn't have a time to put out an update, but I did give you guys a great little piece that I did a while back on Richard Dennis and the Turtle Program. So I hope that you guys got a chance to watch that and that you enjoyed it. But tonight we're talking Australia dollar. We got stopped out yesterday, if you can believe that. Man, what a frustrating experience that can be. But I wanted to talk a little bit about expectations and kind of share with you uh, what happened over the course of the trading day yesterday and today. Now, traders, just to orientate you and those of you who are new who didn't see this, we had identified some ratio confluence right around here at the 1414 area. We had taken a short position in here as the market rallied into oversold or overbought territory at around 92.89, and the market pulled back, and then you see the market rallied again. And if you look down at the screen, we had the bearish divergence there that we like to see. If I bump this out to a daily chart, let's just go ahead and do that, and we can look at it on the daily. We can see that on the daily chart we had this, let me just get this out of the way so we can see things clearly. You could see that we had the divergence here as well, heavy divergence on the double top highs, and everything was looking really, really good. And as we shift back down here to the 4-hour chart, it was right about this time, right about in here, about 6, 7, 8 o'clock noon into this time period here, where I started to get some emails and some messages on Skype. And for those of you who are, I'm sure, watching this video and thinking, "Oh, that was me," don't worry about it, because I want to use our conversation as a tool to help other traders. So don't take it as something derogatory, because it's not meant that way at all. But I started to get these emails that were saying, like, I'm watching gold and I'm watching these other charts, and they're showing some major divergence, and it looks like things are going to be really good. And I got another email that said, I'm seeing the divergence on the daily chart, and I really think things are going to turn around here. What do you think? And I'm getting all of this back and forth, and I'm emailing the traders, and I'm responding, and I said, well, we're just going to have to wait and see. We've taken our trade. The market appears to be showing signs that we're going to see a reversal happen, but it hasn't happened yet, and so all we can do is really wait. And traders, one of the reasons that I was so cautious, and I'm so I guess cautiously optimistic isn't even the right word, but so cautious about any type of prediction whatsoever, is that I've been here so many times. I've been in the situation so many times where I got involved with a trade, and the trade started to go sideways on me, and everything looks like it's working out perfectly. And what do I start to do? I start to count that money before it's in my bank account. I start looking at those pips and thinking it's only a matter of time before it rolls over. And man, that's going to be another 150, 200 pips of profit. And then I look over at some of the other trades that I've got setting up, and I say, well, if that one comes through, then that's another 400, and I'm going to finish up for the month 800 pips. And I start thinking about what that money's going to do and what that money means. And then what happens? Well, the Australian Open, we get a spike high that stops us out, and all of a sudden that flood of emotion comes rushing back into us, and just like we got kicked in the chest or hit with a sledgehammer. We start to get really discouraged. And then we watch, not only as we just got stopped out of the trade, but now, to add insult to injury, the market pulls back and now begins to roll in our favor and achieves new structure lows. And now we're just kicking ourselves, because now we would have been up 60, 70 pips in here. It would have been a nice profit for us, and we start second guessing ourselves. And now we start saying, well, we should have just had our stops higher, or we should have just left it open-ended, because we knew it was going to turn. It had to turn. Why didn't we just remove our stops, or why didn't we just move our stops up to cover? And then what happens next time? Well, next time we do exactly that. We move our stops up, but this time the market just continues to rally and continues to rally and continues to rally. As our small, what would have been a small loss turns into a bigger and bigger and bigger loss. Traders, what I want to impart to you tonight is the importance of not becoming overly excited about any one trade, because in an instant, in a matter of just about an hour, we see the market spike high, takes us out on a trade that we've been waiting days to see a completion on. That can be devastating in and of itself, but to add in the component, the emotional component of having built up an expectation that the trade is going to go in our favor, well, traders, it can drive a man to drink. I'm not going to lie to you. And the best thing that you can do as a trader when these situations put themselves together is for you to step back, close your computer, walk away. Don't begin to count that money before it's in your account. You have to wait. And while doing that won't prevent you from having losses, what it will do is put you in a better state of mind when those losses do occur. Because traders, we're going to have losses. I guarantee it. You guys want to trade this trading model, this trading system, if you want those large returns, we're going to take some losses. The important thing is, how do we deal with those? Do we begin to second guess our decision making? Do we begin to modify our trading plan, a trading plan that we know works and we know is effective? Or do we continue to trade our plan effectively and efficiently because we know in the long term it pays large dividends? Let's go ahead and pull over the current positions list. We have made some adjustments to the current position list, and I'm going to drop this down in here so you guys can see it. But we have closed USD Canada. This is closed positions for the month, 419 pips there, USD Canada. And then we took a little bit of a loss on Aussie dollar. Takes us to about 352 pips of closed position profit. We've got 3 open orders right now. The prices are there for you to have a look at. Those are our entry prices and the buys, and then of course they are pending orders. So we'll just continue to keep an eye on those as we move forward. But there are adjustments to this from the last chart that we sent out. I did major chart revision today after the market has moved so sideways for so long, and kind of just took some things off the list and reevaluated what we were looking at. But for right now, this is where we are. And tonight in the private client group, we're going to talk about the Aussie trade, and we're also going to take a look at one other chart, and I'm going to show you some ideas of what's going to happen, I think, in New Zealand. We've got a trade setup happening in New Zealand as well. But until next time, traders, good luck and good trading. And if you want to go by the website, I think we've got some new information up there on the power of patience underneath the recent articles. So go and have a look at that and have a read through my latest article. I think you'll enjoy it. But until next time, guys, good luck and good trading.